let me hand over to Antonio Machado from Iberian Property. Antonio, just highlight a little bit the session and also introduce our speakers.
Yes, many thanks, Richard. It's a pleasure as an Iberian Property being in partnership with Real Asset Media. We have been doing so for the last 3 years. And let us introduce Roger Cooke. Roger Cooke is an Englishman living in Spain for a very long time, a special observer of everything that happens in real estate, and being my colleague, I may say, as chairman of the Editorial Council of Iberian Property. Following the order, Paula León comes from the Sareb. The Sareb is the very big Spanish bank handling with all the bad assets from the last crisis. Eduardo Ceballos is the chairman of the Spanish Association of Shopping Centers, a renowned personality among Spanish real estate, and Manuel Costa is our colleague from Portugal. Is in representation of APFIPP. APFIPP is the funds association and a major player of the Portuguese investment industry. So I will first ask Roger to give us a little bit broad view of his feelings and how we see these very exquisite times that we are living. So, Roger, what are your economic and social findings and reflection from your personal experience? And I will begin with you with a broader view, and then I can give a few more data, and we will follow. Roger.
Okay, Antonio. Well, thanks very much, Antonio. Hello, everyone. First of all, I'll put a caveat. I'm not an economist. I'm a real estate person, but I'm going to just offer a few general views as to how I see the situation here in Spain, principally, but probably some of the comments are very relevant to Portugal as well. Clearly, we've got a second wave of the virus. Well, some people hoped and still think the summer or the end of the summer will help that situation. It's still very unclear how it will be controlled. Uncertainty about future confinements, even if those are local confinements rather than national confinements, may impact on business, and more importantly, makes planning your future even more difficult. And I think it's also worth noting that the picture is by no means the same in each sector. In some sectors, many people and businesses are really being stretched absolutely to their limit, probably both emotionally and financially, whilst in others, businesses are performing well. So it is a very mixed picture. Even in hospitality, hotels and restaurants, there is a mixed picture, depending on location and type of client. Some hotels and restaurants had a very good summer. Others, frankly, had a disaster. My sense is that it's probably fast food end and the higher end of the sector that has performed better, with the mid-market being the one that has suffered most, perhaps due to pricing, perhaps due to not having a regular client following or a known brand. I also think it's worth noting, I mean, in my view, today the government has a very sensitive balance to play between health risk and economic risk when defining their policies. What level of health risk is tolerable so as not to further damage the economy is a major challenge. And I think people's patience is getting to the limit, and that has to be taken into account. The government is now showing signs of recognizing the damage to the economy more in its policies. It was 6 months ago very much focused on health risk, and I think that's a positive issue. There is still, however, concern as to whether the government help assistance is arriving where it is needed, both in terms of individuals and sectors. Although there is provision, it seems quite complex bureaucratically, administratively, and there are doubts as to whether the money is getting quickly enough to where it's needed. I think the main challenge we face, both as a real estate sector and an economy, is how do we recover employment? Not only how do we reincorporate those who are on temporary suspension of contracts, furlough, but there's a great need to be able to generate new employment. And I sense that businesses are going to be very, very cautious indeed about new hirings. They need to be able to see such as an asset and not millstones around their neck. So the question is, how will the government, and especially the current fairly extreme socialist factions in the current government, how will policy be prepared and agreed to face that challenge of incentivizing businesses to hire, which, when talking to companies at the moment, I sense is fairly well down their list of priorities, when for the country's and economic perspective, it is crucial. One clear opportunity I see in the current situation is for the country to go very much more towards promoting local production of what we consume. That can boost local business across Spain and give employment to the less skilled part of the community, of the workforce, where most unemployment has occurred. I also see technology, and we've seen technology booming in America again, and I think technology can be a very important area for the country in the future. So I think, just a brief summary, I think businesses reacted well and responsibly to the challenges to date, although it's suffered significantly. Uncertainty is a major concern. I think we're going to have an uncertain future, and that makes it very difficult to do long-term planning, and therefore we do need a flexible legislative regulatory environment to accommodate that. If business does not suffer a further negative change to the rules, I think the outlook actually is quite positive generally. And obviously the shock to the system has produced opportunities, and people have shown significant innovative skills over the last few months. So I think overall we can be fairly positive as long as we can come back and control this second wave of the virus. Those are my views, Antonio.
Many thanks, Roger. We have prepared a few figures just to give a glance. How do we saw these moments? And in fact, the activity of 2019 was great, was a great volume. We begin 2020 very promising. We saw a record of transactions exceeding 3 billion euros in Spain, and overall record in Portugal of 1.77 billion, even if almost half of this was only with one transaction in a very special transaction with a portfolio from shopping centers from Sonai. But even so, 1.7 billion was an incredible amount for the Portuguese markets. The second quarter was a different reality, but even so, Spain, we saw 1.8 billion, meaning that in the overall semester, we have this very astonishing figure that is to have for the overall Iberia, we are above 15% than we were in 2019. So even with this very severe outlook, investors still make a lot of transactions. We just saw in September a very large office complex being negotiated a few days ago for 400 million, very core asset, very core investor. So the fact is, although we have all this economic meltdown and uncertainty and everything else, the fact is money is too much. And I was seeing a very nice report saying that one of the most traditional ways to make savings was in monetary market funds and bonds and government bonds, and these kind of alternatives now offer negative returns, and they used to be the most safe ones. So it's very hard for people with money to say, where will I put it? So real estate is being perceived as a fixed rent asset, and money is really coming. So it's a very hot and new situation where we have some economic difficulties, but a lot of money. So where this balance leaves us is the way to ask to Manuel Puerta da Costa, perhaps the most financial guy in the room. So Manuel, between the economic clouds and the money coming in market, where is the balance?
Hello, Antonio. Thank you very much, Richard, for your introduction. Hello, Roger, and all the panelists. Good morning. I sense that it's very clear to us all that this is a very new situation to all. I believe that none of us, irrespective of their age, has lived through such a moment. So it's always difficult to predict, especially about the future. Now it's even more difficult to predict the future with this new situation. And what I'm almost sure is that the humankind will find and solve a way out of this, and we will eventually evolve into a new paradigm, not so different from the past, but with a lot more restrictions under and above our heads. This is pretty clear to us all, with not only the lockdowns that we had back in March and April, but also with the discussions going on through Europe about this second wave and the forms and the different ways to challenge this second wave. I guess that this new paradigm I'm speaking about is about understanding the consequences into different sectors of this pandemic situation. As you heard, Roger was already saying that there have been businesses that have been strongly affected, but not all at the same time and the same way. Not only due to location, probably not only due to their pricing policies, but also to a very specific situation that this pandemic has shown us. It's the fear factor that has been introduced has been mostly felt by two kind of people: elder people and the richer people. So the elder people are more afraid and have been more affected, and so have been effectively locked at their homes. They are not consuming the way they were consuming. They're not going through fancy restaurants. They're not going to holidays in resorts, and so the people with the higher purchasing power are more affected, and this leads into consequences into these lines of businesses. At the same time, politicians have been accusing youngsters to spread the virus, and that is the consequence of that, or the material fact of that, is that low priced restaurants, low priced hotels, and locations where you have a lot of youngsters traveling, people between their 20s and 30s or 40s, are those that have not been suffering so much this summertime. This is a reality that in Portugal is very clear. The hotels that were open and had higher occupations were those that offered some kind of attraction to the youngsters, and the business that were related to housing youngsters in different locations out of the resorts, in small towns, in the near the seaside, even in Algarve and so on. Those kinds of business were those that were less affected by the pandemic, just because the youngsters were less afraid of going out. So we'll from this. There's another thing that we must also try to adapt, is that we will be living with through this coming probably 12-24 months with a low level of generated income in our economies. This is due to the higher unemployment that is going to be felt, to the difficulties that the governments will have in subsidizing everything, and this effect will lead to companies going into bankruptcy, and a situation where I feel that we are just at the beginning of the higher consequences. So this means that being difficult to predict what will happen. The outlook is surely bleak in the economy as a whole. And real estate is a reflection of the economy at the end of the day. If the business do not generate income, if there is higher unemployment, there will be an adjustment. If this adjustment is stronger or slower or just smaller, is just a question of the way that the governments address this issue. And sometimes when you put too much restrictions under the economy and you put too much laws making owners less protected, like we've been seeing for instance in shopping centers in Portugal, I feel, and that's my own political perspective about this issue, I feel that this is not the correct way to solve these kind of problems and to protect one side against the other. So Antonio, just a very last comment. The Portuguese fund industry has been going throughout this 6 months of pandemic very well. We haven't had redemptions. And performance has not been affected strongly, but the valuation process is an ongoing process. So we'll be seeing this kind of impact in the next 6 to 18 months. Thank you.
Perfect. Let me come to shopping. Shopping is in the heart of what we do daily. So, of course, if we can't go out, we will go less to shopping centers. Eduardo, how shopping centers are adapting the activity, and which is the possible balance of the activity? How are you living the relationship with investors? Spanish and Portuguese shopping centers as a very special relation and connection that is very different from the Anglo-Saxon world. Eduardo.
Hi, Antonio. Thank you. Good morning, all. Thank you on behalf of the Spanish Council for the invitation, and good morning to all the panelists. Maybe I would like to remind just 1 minute which were the main trends in the sector. Not very different than other trends in other countries across Europe. Okay, shopping centers, if we can speak generally, we were already working intensively in digital tools and integration omnichannel strategies. This is a main trend. and also investing, and this is very, also in Spain specifically, hits a bit, but generally in shopping centers, we were exploring all those activities more linked with experience. So some, not in products you can buy by internet, but also experience, so everything related to leisure, everything related to F&B, etc. There was a lot of investment around that, okay? As a matter of fact, in Spain, for instance, in the last 7-8 years, since the exit of the financial crisis of the previous one, all KPIs were positive in the centers, and we were growing in sales and in traffic, and this was a general trend. Then COVID has come, okay? So all of this has, like, of course, changed, and now we are in the middle, or maybe starting a second wave, as you were saying, as Roger and Manuel were saying. How has reacted the sector? We need to differentiate, I think, here the terms. In the very short term, of course, the focus has been and is been reinforcing all the security measures in the centers in order to give confidence to the customers. And this means increasing the security, increasing cleaning, increasing all these kind of aspects. Also improving the people counting systems in order to guarantee the capacity in the centers and the traffic in the centers. Then, as landlords and retailers have had the negotiations due to the lockdown, so this is the process that has run, in my opinion, quite fast, because in Spain we need to remind that we were closed between 10 and 12 weeks, depending on the area. So one of the countries in Europe with the longest lockdown. And currently in the country, we consider that around 75-80% in average of the contracts affected have been negotiated. So the sector has been regulated quite well with measures, as you can imagine, and as in other places, with rent-free period or discounting rents, or in some cases turnover rents. But the sector has been is being regulated or self-regulated, I would say, quite well. So what's happening now? There are still uncertainties, of course. We are having some cases now. I don't know if it will be a second wave. All of us expect not to be so hard as the first one, but there is uncertainty in this moment. That's right. Other situation that happened, of course, is that shopping centers generally have stopped or slowed down investments and capex. Okay, so this is a logical consequence of willing to cut some costs. This is the very short term. In the midterm, what's happening is that this digital tools implementation and these omnichannel strategies are being accelerated. So retailers are focusing more and more in the click and collect, integrating both online and offline channels. And so landlords are investing in technology, like in the centers like click and collect, use of QR codes, etc. That is being most and most, we will see more and more. And this integration, online, offline, will be, of course, part of the future of the shopping centers. And then, but depending, of course, on the pandemic, we hope to see soon again good figures from leisure F&B. But for this, we will have to wait, because now this is very dragged due to the situation. So currently in the country now we have restrictions depending on every region, some restrictions in capacity of the centers, and of course the result of all these situations is that there are some drops in traffic and sales in the centers. Difficult to establish averages because the situation is being very variable, and we can see formats where the traffic and sales are being quite the same of the previous years, and other decreases maybe up to over 40 or 50%. And this is happening like that. This is depending a lot on the activity, the format of the center, and also location. In formats, you see how generally retail parks are trading quite well. This is open air centers with the big boxes, and we see many cases in which the numbers are being the same or even better than previous year, both in traffic and sales. This is also related to the activities. All activities related to the house, so DIY, furniture, also, of course, the food, are selling probably more than previous years. And these activities are very present in retail parks. So retail parks generally are trading better than shopping centers. Shopping centers have a lot of presence of the fashion. The fashion depends on the activities. or the categories of fashion, sorry. So everything related to the office now is very penalized due to the smart working, the lack of ceremonies, of course, when sports sector, more casual fashion is living better. So this is a general situation. Then in the case of Spain, where tourism is so important, in those locations that were depending more in summer of the tourism, international tourism, have been having a much worse summer than others. So urban locations and locations not depending so much on tourism have been trading better. So we have a very variable situation also depending on the format. How does this affect to investors? You were asking, Antonio. We've seen there is an growing interest in essential sectors like supermarkets. So we've seen some transactions of supermarkets in sale and leaseback with the sale and leaseback operation, which is quite logical in these situations because these essential activities were not affected by the lockdown and were even growing. When other operations are being slowed down, probably until the P&Ls and the NOIs of the centers will be stable, and probably unless there will be an urgency or a necessity of selling, other operations are being slowed down. Having said this, in the first half of the year, there were some operations coming from the previous year, like the sale of part of Puerta and into Asturias. So the volume of investment transactions in Spain was not small at all, and with numbers even higher than 2019.
Many thanks, Eduardo. Paula, Sareb is one of the important doors in Spain for international investors. What is the perceived feedback about Spain and the sentiment for investing in real estate?
I have to say our feedback from investors is that Spain remains very interesting within the European market. So Eduardo was saying, obviously, we've seen lately a high-profile deal that actually confirms this. But in all sectors, actually, we are seeing investors being very interested, not only in the deals that they had already ongoing pre-COVID, but in new things and things that are coming up in the market. Of course, the big question for everyone right now is what is the right price to invest in Spain? And that is a question that I guess none of us have the answer yet. Regarding sectors and what the interest lies in, I think the clear winner at this point is logistics. Everyone, or many investors, even non-traditional logistic investors, are looking at these as core value or something that in the medium or even in the short term is going to be very interesting. On the other side, unfortunately, the loser, let's say, on this sector is hospitality, not hotels only, but all kind of hospitalities, restaurants, all kind of leisure. This is something that, even though it's getting a lot of attention, maybe it's getting the wrong kind of attention, as investors and especially international investors are expecting price to drop drastically. The number of calls we've had this summer looking for hotels has been staggering. Unfortunately, Sareb is mainly residential, so we didn't have a lot to sell on that. But it is a sector that is receiving a lot of attention. There are, however, a lot of investors that really believe in strong fundamentals of Spain and actually understand that this is just a circumstantial situation. And we see that because the housing investment, all kinds of housing, obviously normal housing developments, BTR, student housing, everything is seen. The activity has not stopped. The development activity, the investment activity has not stopped. So obviously there are a lot of investors and international investors that are still believing in the strong fundamentals of the Spanish economy, and that this is going to be, let's say, 24-month window where there are going to be good opportunities for those that have the cash to really use it. But the fundamentals of the country are still there, and we're seeing the main investors that we have seen in the last 7 years remain in Spain, at least at this point. Obviously, that takes us to the, let's say, the key for these investors, which is financing. We're seeing banking concentration process right now in Spain that will have a lot of consequences. One of the main ones is senior lenders are being reduced in Spain. And traditionally, that means that there's room in the market for international banks. And with international banks come the international investors that they're used to work with. So obviously, we're going to see, I guess, in the next 18, 24 months, probably we're going to see new players in the market, both of course, in the financing, that is key, and in the investment part. Regarding the financing of the housing development, mainly, we are seeing a lot of alternative financing as well. So that's a new kind of investor that is still in Spain, that we've seen it in the last, let's say, 2 years. There has been a lot of activity there, but we expect more activity on that. And with that kind of investors, or with that kind of financiers, let's say, new types of investors come to the country as well. So actually, lots of activity. Let's say the price or the deals that are going to be crossed is the big question that everyone is looking at now. But investors still perceive Spain as a very interesting market with a window of investment opportunity that they are willing to really make the most of. So still an interesting market.
Paula, many thanks. Very interesting. Richard just told me that we have a clock countdown, 5 minutes counting. So my question is, because many of who are seeing us is not seated in Spain, I will begin with you, Roger. Give me one good reason to invest in Iberia to everyone abroad who is seeing us. Why Iberia deserves to have international money?
Perhaps I have to give two reasons. One are I think the underlying fundamentals are very, very good. And the other reason is I think it's a market which reacts and adjusts very quickly. It hasn't had long leases. Even if there is a lease, tenants go to the table to negotiate. Perhaps the office sector is the one sector where that has been slower. But I think those are two good reasons to invest in Spain.
Okay, great. Eduardo, in 1 minute, 2 reasons to invest in Spain and in shopping centers on your side.
I have to refer, as Roger, to fundamentals and to the trend pre-COVID. It's a sector which is not, there's not overbuilt area. There's the number of developments in the last year were slowing down. The density in the country is quite reasonable, similar to other European countries. So most of the assets can have a good future. Now we are in a very exceptional situation. And as I was saying, the shopping centers sector has been evolving like the general consumption in Spain since the last crisis. Spain is the country where the e-commerce has not been affecting so much at all to the physical retail. And this is like that when UK this year is around 20%, I think close to 20% in e-commerce. In Spain, we are speaking about 6%. And this is also showing some resilience of the shopping centers. So, and we hope to come back to fundamentals in very short time as soon as the pandemic allows it.
Paula, what is the main argument when you face investors? Why to invest in Spain?
I think both, obviously, as Roger and Eduardo were saying, fundamentals are key. And also Spain has been we reacted well in the last crisis. And actually Sareb is a proof of that. I mean, we are one of the few countries in Europe that actually created a bad bank and solved the banking crisis through a solution that gave the economy a big push and put the real estate market back on track. So actually, if there is need to react, we will react. And actually, fundamentals are strong enough that you can see housing. I think that's one of the key markets. Housing has been a market that has not been that affected. So obviously, that's telling you that the country itself will react. And that's one of the keys that we always discuss with our investors.
Manuel, what is the reason to invest in Portugal? Why money should flow to Portugal? You are in mute, Manuel. You are in mute.
it's not a question of why, it's more a question of when. As a matter of fact, I believe that the strong inflows that we witnessed in the last 2-3 years, above 3 billion euros, will continue into the future, and that is based on fundamentals. People that invest in real estate are not short-term investors, are long-term investors, and they understand what are the fundamental that is behind the Portuguese backdrop. And the fundamentals are a controlled public debt, strong skills, people with mobility, strong infrastructure, and a very positive environment for foreign investors, not only, and foreign residents. That has pushed the real estate market in Portugal throughout these last years, and I believe that the comparative advantages between the Portuguese market and other European markets are very clear-cut to several investors that have invested and continue to invest in Portugal through different kind of vehicles. And so I strongly believe that this for this time will not be different, and we'll have a cycle where those investors that really understand the real estate investment is for the long term will have higher returns for using this unique opportunity to get into a very strong market.
Many thanks, Richard. I believe we set our timing. Many thanks to Roger Cooke, Paula, León, Eduardo, Ceballos, and Manuel, Puerta de Costa. Richard, we are back to you.
Perfect. Thanks very much, Antonio. Thank you to you as well. Really interesting panel there. Thanks to all of the speakers. Really great to get that sort of information on what's happening in the market, both in Spain and Portugal, and also the opportunities. And I particularly like the sense of it's not why but when in terms of investment that people should be considering. Thanks very much. Very interesting discussion.